pattern. This is a strong buy signal, especially because it happens right at the beginning of the New York session. So here's the setup. You enter at the close of the confirmation candle. Place your stop loss below the low and target the next key level. Once the trade is set, you let the market do the work. And as you can see, price moves exactly as expected and reaches the target. Now let me show you 2 mistakes that can ruin your trading if you don't avoid them when using this strategy. The first mistake is thinking this strategy is a holy grail. Look at this chart example. This is the British pound and Japanese yen on the 5-minute chart. Here we have the most recent high and the most recent low before the New York session. Now watch what happens next. As the session opens, price moves up, breaks above the resistance, sweeps liquidity, and then closes back below it. This looks like a perfect setup. You feel confident, you feel excited. So you take the trade. You enter at the close of the candle. Place your stop loss above the high and target the next level. But then, the market starts moving against you. And this is where most traders make a critical mistake. Instead of accepting the loss, they move their stop loss, hoping the market will reverse. Now watch what happens next. Even after moving the stop, price continues higher and hits it. Instead of losing 2%, you lose more than 6% of your account. And this is how accounts get destroyed. If you had simply accepted the loss, you would still be in the game. Because in trading, discipline is what makes you profitable over the long run, not one single trade. And I'll show you exactly why in the next example. This is the US dollar and Swiss franc on the 5-minute chart. As you can see, this is the most recent swing low, and this is the most recent swing high before the New York session opens. Now watch what happens next. Price moves down, breaks below the support level, sweeps liquidity, and then closes back above it. This is a clear liquidity sweep. So you take the trade. You enter at the close of the candle. Place your stop loss below the low and target the next level. And yes, the trade works. Price moves up and hits the target. You feel confident, you feel excited. But here's the problem. Look closely at this setup. The reward is less than 2 to 1 compared to the risk. And this is where most traders make a mistake. Because what matters is not how many trades you win. What matters is how much you win when you're right, and how much you lose when you're wrong. If you keep taking trades like this, you can win multiple times,